What I'm going to touch on today, guys, is why our product, the Allianz IUL, fits so well, number one in that Kaizen space, and number two as just that other retirement bucket. Our product is really designed full-heartedly for that retirement income play, right? This is not strictly just a life insurance death benefit play. This is I want to max fund this thing and then pull out as much income as I possibly can in my retirement, years. And so here at Allianz, we love acronyms, and so why not keep that going? And so CLIMB, essentially what that's going to cover, guys, today is I'm going to talk about our company strength. I'm going to talk about our loan flexibility. This is really, I would say, one of the things that sets us apart from other IUL carriers out there is that flexibility when it comes to actually pulling out the money, and I'll get in more detail on that. I'm going to talk about our indexing experience. And I would say one of the things when I talk about this, we'll be going over in detail on that rate lock feature. If you haven't heard of that feature, this will be a really, really good thing for you guys. This, I would say, has really kind of been the game changer and really has put us, as Doug mentioned, we are the number one IUL carrier based on 2020 numbers. And a big part of that is that rate lock feature and really putting that control into your client's hands. And I'll show you more of how that looks. Now I'm going to talk about some marketing tools. Obviously, with AG 49A guidelines, we are no longer able to show, bonus multipliers in illustrations. But we have some other marketing pieces and some really cool illustration software tools that will help you kind of better to explain to your clients, here's what's going on. Here's what this thing can actually do. And then lastly, I'm going to just touch on some of our bonus options and multipliers and our different allocations. First things first, obviously, this is a life insurance play. So obviously your client does have that death benefit protection. But like I mentioned, guys, the main thing when it comes to our product is that accumulation potential and those tax advantages. Our product, like I mentioned, it is solely designed for putting money in, building up that cash, and then pulling that money out as efficiently as possible. So company strength. It's really important to know, hey, who am I doing business with, right? I want to make sure that when, I'm trusting, my clients with Allianz, I need to make sure they're going to be around for the next 100 years. And I would say these numbers that you guys can see on the screen kind of speak for themselves. We are owned by Allianz SE in Germany. So we're part of that global financial powerhouse. We serve over 85 million customers in 70 different countries. And so with that, we are the 46th largest company in the world and the 5th largest asset manager in the world. As you can see here on the right, guys, our ratings, like I said, speak for themselves. But the one I really want to just briefly touch on is that Comdex score. This is a very, very important number. And I would recommend when you are looking at different carriers and you're looking at all these different, hypothetical illustrations, the main thing I would first start is just, hey, what is the Comdex score of this company that we are potentially going to do business with? Typically, we've heard, guys, anything under 90 could be a potential red flag. Allianz, I think we're very proud of our score of that 94. This ranking is based on a scale of 1 to 100. And so anything kind of under that that 90 would definitely be a potential for a potential red flag. So definitely look at those Comdex scores when you're looking at your carriers and who you want to do business with. Loan flexibility. This, like I mentioned, guys, this is what sets us apart. And what I mean by that is a lot of carriers either have maybe a variable loan rate, right? It could be a participating loan and it might be at 4 or 5, but it's not fixed, right? That thing is variable. So it could go up to as high as 8. Ours is set at 5%, and that is guaranteed not to change. So when you take out a participating loan, we're going to charge you 5 and only 5. We're not going to raise that potentially to 6 or 7 or 8. And it's not going to drop to 4. It is a fixed 5 for the life of the contract. Now, we also offer a fixed loan. And so in that aspect, in the first 10 years, we're going to charge you 2.91% and credit back 2% on that loan value. In years 11 plus, we are going to charge you 1.96% and credit back 2%. So it's essentially a wash loan. Now, what makes Allianz unique is that you guys have the ability to allocate your loan value and unloan value differently. And so what I mean by that is if you have cash value, let's say of $100,000 and you want to take out a loan, you can take out that loaned portion separately from the rest of your cash value. So if you have a client that loves the S&P 500, you can leave that cash value in the S&P And on that loan money, maybe you want to put them into one of our rate lock indexes, which I will touch on here briefly, and have the ability to lock in those profits and make positive arbitrage. And the other really nice thing with Allianz, guys, is your clients have the ability to go between fixed and participating every single year. So if one year they're very bullish on the market and think, hey, I know I can make more than 5% on my loan money, put them in an index that they love. If the next year they're really worried about the market, put them in the fixed bucket. Every single year they can change, or they can do a blend between the two. So they could do a 30-70 split if they wanted to, or 50-50. And every single year they get to change that out. And that is same with their cash value as well. So they can change their cash value index to anything they want every single year, or do a blend into all the allocation options that we offer. And so it's really, right, just it's that power of that flexibility and control that your clients have, knowing, hey, I can take out a fixed loan this year, but next year I know I can change it to a participating loan. You're not set it like, hey, you have to either do fixed or participating for the life of the contract. Indexing experience, I would say this is something that we really hang our hat high on, is that we have been kind of in the front runners when it comes to our unique options that we offer when it comes to our indexing options. We are known for our annuities here at Allianz. And with that, we do about $15 billion a year in annuity business. And we do all of the hedging for that here in-house. And same with our life insurance business. We don't use a third party when it comes to our hedging. And so with that, over the last decade, we have saved over $2 billion by doing it in-house versus paying a third party. And so with those savings, we have been able to offer some really unique options when it comes to our indexing allocations. As you can see here on this screen, 2015, we came out with the monthly sum. In 2008, we came out with the blended index strategy, which is made up of 35% Dow, 35% bonds, 20% Euro stocks, and 10% in the Russell 2000. In 2013, we came out with the trigger method. That method is in the S&P, and essentially what that is if the S&P does anything positive, your client will get a 7% rate of return. So if the S&P does a positive 0.1, your client gets 7. If the S&P does a positive 10, you get 7. So that's the trigger method. And then we came out with the volatility controlled indexes. And these indexes are made up between bonds, equities, and cash based on volatility. And those two indexes that we offer, the PIMCO and Bloomberg, are the ones that are available in the index lock feature that I really want to stress on today. And what that feature is, guys, is it allows your clients at any point in time to lock in profits. And so I would say the old way of looking at these, right, is you have your beginning year and your ending, right? You have, say your policy goes in force today, you got to wait all the way till January 31st of next year to get your rate of return. And hopefully the market stays high, right? I think we can all remember back in 2018, the market went up for 3 straight months. I had a lot of people that were very excited. They were showing 12, 14% rates of return. And then Q4 happened in 2018, the market went straight down. People that were expecting a 12% rate of return ended up getting a 4 or a 3. So what Allianz did in 2019 is they came out with a feature saying, hey, what if the client had the ability at any point in time during their anniversary year to just lock in a rate of return that they were happy with? And in 2019, we rolled out that feature and gave that control to the client to say, hey, at any point in time during the year, your client, let's say in the first 6 months, they're up 9%. And they go, hey, you know what? I'm really happy with that. We illustrated 6, I'm showing 9, and I'm really worried about the back half of the year. Now they can lock in that 9. They can lock in that gain and not worry about any volatility until their next anniversary. Now, in 2019, we rolled out that feature. Last year, we rolled out a feature called the auto lock. And so Allianz took it one step further and said, hey, what if we gave the client the ability where they didn't have to sit there and manually track it every day or once a week and then have to make a phone call or go online to lock in the gain? What if the client had the ability to just set a target number and know that if it gets there, they can lock in that profit, not have to do anything? And so last year, guys, we rolled out the auto lock feature, where that's essentially what it is. Your client can set it and forget it. So if their policy goes in force today, they can go online or make a phone call and say, hey, I want to set my auto lock target at 10%. We see that number a lot. People just say, hey, double digits, I'll take it. And so now they don't have to sit there and track it all they want. They can just set that number and not worry about it. But the unique feature, guys, with that is, let's just say your client's policy goes in force today, and in 6 months, they're like, hey, I just want to log on and see how my policy is performing. Or Doug can run you guys a report and just send it out to you as well. And they log on and they see, hey, look at this. My PIMCO is at a 9.4% rate. I set my upper target at 10, and it looks like my Bloomberg is lagging at 2.8. Well, your client can go in and say, hey, this PIMCO's at 9.4. I know that I set an auto lock target at 10. I'm pretty happy with that 9.4. They don't have to wait for it to get to 10 to lock that in. They can cancel that auto lock feature and manually lock in that 10% gain. And so in this example, as you can see here, that's exactly what they did. They logged on, they saw 9.4, that auto lock set at 10, they canceled the auto lock, manually locked in one of them at 9.4, and they said, hey, this Bloomberg is kind of lagging. I'm going to let it ride for a while. That's the other unique thing, guys, is you don't have to, when you lock in these gains, you don't just say lock and then it locks all of your indexes that are in an auto lock feature. You can lock in each one individually of each other, which is exactly what's happening in this example. So they're going to lock in 9.4. They know that half of their money now is going to get a 9.4% gain no matter what. And if the market continues to rally, they know, hey, this 2.88, in a couple more months, that thing might be at 10 or 12, and I can lock in that portion separately of the one I already locked in. Now, a big question that we get is this. Hey, I started at, X, I locked in at a 10% gain, and then the market tanked. What is my beginning value for the new year, right? Because this feature, this rate lock feature, guys, is every single year. Your client has the ability. It's not just, hey, you can only lock in one time during the life of the contract. Every single year, your client can lock in their gains as they see fit. Now, like I mentioned, the biggest question is, what is the next year's value? Is it where I locked in at, or is it where the index finished at? And the answer is it's where the index actually finished that year. So if you locked in at, let's just say at 200, and then the index finishes your policy anniversary year at, let's just call it 190, your beginning value for that next year is 190, not the 200 you locked in at. You still get those gains, right? You still get that 10% rate of return. That will be on the statement. But now your year two value is whatever that index finished for the year at, not where you locked in at. Very big question that we get all the time. Now, what you see on this screen, guys, is this is the average rate of return that our policies have done since 2006 up to through 2019. One thing that you do not see here, guys, is since 2019, we rolled out that rate lock feature. As of December 31st of 2021, the average locked in rate with the auto lock feature is 12.83%. That's the average locked in gain that clients have seen. One thing I want to mention, guys, with these rate lock indexes, right, the PIMCO and the Bloomberg, another big question is, okay, that's great. What is the cap on these indexes? And the answer is there are no caps on those two indexes that offer the rate lock feature. They are uncapped on the upside. And that is contractually guaranteed to stay uncapped for the life of the contract. I know a lot of you have clients that love the S&P because they get it. It's easy. It's simple. But look at the caps on these days. A lot of them have 9.5 or 10. The highest I think I've seen is a 10.75. Right, and everyone thinks, oh, that's it's pretty great. I can get a 10% rate of return. Right, where the S&P averages, I think right now it's about a 9% rate of return over the life of the S&P. But we all know the S&P doesn't just go up 8% every year, down 2%. It's up 30, or it's down 40. And so if you have a cap at 10, and one year you hit the cap at 10, which is great, and the next year you get a 0, your average rate of return now is 5%. Wouldn't it be nice to have an index that if the S&P is up 30, you might be up 22, 23? Now, if you get a 0 the next year, that 23% rate of return in year one, year two, you get a 0. Your average rate of return now is 11.5%. Right? You illustrated 6. Now you're way ahead of the game. And I can honestly tell you guys, I've seen indexes locked in last year north of 20%. Actual returns that their clients have seen on their annual statements. Very, very powerful. If the S&P runs, why not be in an index that's going to run with it? The nice thing too is, right, you got a 0% floor. As I'm going to show you in a couple slides, we actually have an index that is offered at a positive 0.9% floor. So if you have clients out there that are extremely, extremely conservative and say, hey, I cannot get a 0. That'll just drive me nuts. I'm already paying some fees on this product. I don't want to get a 0. Is there anything out there that's going to give me better than a 0 floor? And the answer is yes. We offer an index that I'm going to show you called the Classic that gives you a positive 0.9% floor. So if your index is down 1 year, your clients actually get a positive rate of return. Now I mentioned some of our marketing tools. And Doug, I know Doug can help you guys a lot with this stuff too, as you guys get into our products and really want to understand some of these things or what's available to you. Doug is fantastic getting this stuff out to you guys. We offer some really cool things. This in particular is one that I really like. It's called the backcasting tool. And this is a really good way to provide some insights into the historical frequency of these assumed illustrated rates that people are running, right? Hey, this is showing a 6% rate of return every single year. How likely is that? Great question. We have a tool that can run those scenarios for you and give you a hypothetical of, hey, here's the percent chance that this is going to be at or greater than that 6% rate of return every single year. And so when you have people that are saying, hey, I love the S&P, I love the S&P, well, let's peel back the layers and actually show what is the actual likelihood of hitting these caps and floors in the S&P or in these rate lock indexes. How likely is it that we're actually going to get to these numbers? You want to make sure your clients feel confident in what they're doing. And like I mentioned, guys, the beautiful thing is they might say, hey, I love the S&P this year. Next year, I don't know if I want to. Is there a way I can kind of change if I don't want to be in the S&P anymore? Yes, you absolutely can. Your clients can say, hey, S&P this year. Next year, maybe you want to go into the fixed for a year. Maybe your client says, hey, I am extremely bearish on the market next year. No problem. Why don't you just put in the fixed index, get a 4.3% rate of return for the year, and not worry about it? Awesome. I can do that. Absolutely. Or you want to just do a percentage into that? No problem. But the biggest tool, guys, that we came out with that I mentioned earlier, right, with this AG49A guidelines, where we cannot show multipliers, right? We offer two different multipliers of 40% or 15%. But we cannot show that in an illustration, even though it is contractually guaranteed. Those multipliers that you see with our product are contractually guaranteed. We will never take those away once this policy goes in force. Even though that is the case, we cannot show that in an illustration. So mathematically speaking, if you were to run an illustration, if your client got a 6% rate of return, the best bang for your buck would be to be in the select multiplier at that 40% level. If you were to run an illustration in our software, it would look just the same as any other of our indexes because we cannot show that number. So Allianz came out with this tool called the Showcase tool. And this is a supplemental tool that helps provide kind of an education for your customer to show kind of the working mechanics of our product, right? Actually give them a better idea of what's actually going on under the hood without all the governors of this AG49A. And so it really educates how the policy values are impacted by these bonuses and multipliers at different rates of return. Now you can't, right, if you have a client that's 43, you can't obviously tailor it exactly to your client because that's part of the, right, we can't show multipliers, but we can show them at a X% rate of return with certain years for your client's age. So we could show anywhere from a 35, 40, 45, 50 to a 60-year-old with either 10,000 or 25 or 50,000 of premiums for either 10 or 20 years. But this is a great way for your client to look and say, hey, look, if this does 6.5%, the best option is that select multiplier because I'm getting, right, that rate of return times the participation rate times that 40% multiplier. So if you have clients that are saying, hey, I want to just be in the thing, I'm bullish on these, I love this, I got 25 years of time for this thing to do its thing, what allocation is giving me the most bang for my buck? And the answer is that select multiplier, which I'm going to talk about here in a second. But this tool, guys, and Doug can send this out to you, just giving you a nice hypothetical example. If you have a client that's saying, hey, I need to understand more on this, please show me what this thing can actually do versus, we can get this out to you roughly tailored to your client. And I mentioned the bonus options and multipliers. Now, as you see on this screen, we have 4 different options: standard, a classic, a bonus, and select. Now, standard, I would say, guys, is for that person that wants that simplicity, right? They get higher participation rates and caps, but there's no multipliers or bonuses on top of that. Then we offer that classic index. And this index, guys, is the one I mentioned where if you have a client that is very, very conservative, they cannot stand a zero, this is the one for them, the classic index. And within that classic index, guys, we offer that in our Bloomberg PIMCO and blended index. And so if they love the rate lock feature, they can do the classic with the rate lock feature. That's that Bloomberg and PIMCO index there. Then we offer a bonus option. This is a multiplier. So the biggest difference between the flat rate bonus and a multiplier is this. If you get a 10% rate of return, that classic index your client's going to see on their annual statement is going to be 10.9. They're in that bonus with that 15% multiplier on that same 10% rate of return, their annual statement would show 11.5. And then lastly, we offer for the more, I would say the more bullish client is that select option. That's a 40% multiplier it comes with a 1% asset charge, which I think we can all agree is very conservative. But that same 10% rate of return, guys, now would show 14. So you can see the power of what these multipliers can do if you get a nice rate of return. And so the question really comes down to your clients is this, right? Where do you see that? How do you see this performing? Obviously, I showed you that slide a couple slides ago, right? Hey, our average in-force book of business since 2006 has averaged 6.9%. Our average rate lock that we've seen since 2019 is just under 13%. So the question now becomes to your client, hey, Allianz offers all these great allocation options. Which one do you see, which one is more comfortable to you? If you have a client that says, hey, this thing is easy going to do greater than 6%, I'm all in. Mathematically, that select makes all the sense in the world. You have a participation rate of 140%, and then you take that and multiply that by that multiplier of 40%. So that 6% rate of return, let's just say the raw return of that index is 6. You take into account the par rates and the multiplier, that what they see on their statement is more like 10. And that is, like I mentioned, guys, these multipliers contractually guaranteed. They will not change. They will not go anywhere. And they, like I mentioned too, uncapped on the upside. So this is where, right, this is the conversation you need to be having with your clients. If you have those clients, guys, that are saying, hey, I'm maxing out my 401k. I got the IRA. I need something else. What do you got for me? The question needs to become, hey, have you looked at the Allianz IUL? Well, yeah, I know it's a life insurance product, but like, what is it about it that makes it unique? It is literally designed for you guys to put as much money into it as possible, to keep the death benefit low as possible, and to pull out as much income as possible with this product. Right? We offer that flexibility. We offer those rate lock features, guys. A lot of what we see when it comes to income streams, we have people that love the S&P, and then when they actually take out a loan, they put that in one of our rate lock indexes, and then they set an upper target of 7%, knowing, hey, I don't have to watch it. I'm going to get charged 5. If it gets up to 7, it's going to automatically lock in 2% positive arbitrage for me. And at the same time, the rest of my cash value is in the S&P that your client likes. Like I mentioned, guys, flexibility, control, and power all in your client's hand based on this one product. So with that, Doug, I'm going to hand it back to you. If you guys have any questions, please reach out to Doug. Oh, one last thing I'm going to mention too, guys. If you have clients that are in the rate lock indexes currently, if you have clients that are in this product and they are in the PIMCO or Bloomberg, reach out to Doug. He can run you guys an awesome report that shows you, hey, your clients, this is one of our favorite phone calls to make, is we have a lot of our clients that reach out and say, hey, remember that policy we took out last year? Yeah, right now you're at a 12% rate of return. Your anniversary is not for another 3 months. Would you like to lock in that 12% right now? I mean, what a fun phone call, right? To reach out and just, hey, you're double digits. We illustrated a 6. You're actually double that, and you can lock that in and not worry about what happens for the next 3 months. Doug can easily run you guys that report. You guys can put in any number you want, right? We illustrate 6. If you only want to see any of your policies that are just above a 7, Doug can do that for you. And then you can make some really fun phone calls and take advantage of this awesome, awesome feature.
Yep.
With that, Doug,
yeah, thanks, Eric.